What's up, guys? Welcome back to GTech Finance. Hope you're doing well. Hope you're staying safe. So, on the platform of YouTube, there's a whole lot of people that were asking or wanting to see YouTubers talking about some kind of stock market bubble because of the crazy valuations that we saw, GameStop and AMC. But let's get into it. Let's get the potential for a market bubble, how likely it is. But I'll try to give, as usual, as an almost unbiased viewpoint as possible here, to give you both sides of the story, because there are plenty of reasons why the market may continue to climb in 2021, but there's also some concerns that people might have, and I'm not here to be some kind of guru to tell you what stocks to buy and what stocks to sell, and that the world is going to collapse or everything and it's going to go to zero and you're going to lose your income and all. But I'm here to tell you, so just if you could watch me, it would be great. And talking about a bubble, what I need you to do is hit the like button and subscribe to the channel for the YouTube algorithm. It will help us grow. It'll help us climb. We gotta climb as quickly as the stock market is. And let's get right into it then. So let's get started here. I first wanted to show you that I think there's a chart that I think everybody should see pretty well, and it's not something that I created. It's, I believe, something of Hofstra University created this chart. So it really gives 4 different phases of financial markets, how they climb really quickly, and bubbles, and how these bubbles can form. And so you can go ahead and look through this and maybe even pause the video or just let me explain this here for each one of these different phases and how we can be affected from these. So let me show it to you right there. So on the first part, there's the stealth phase. So this is where smart money gets into the game. So it's probably the big hedge funds that are starting to invest in it, and that launches the takeoff. So once the takeoff happens, you have institutional investors that come in, and that's where the awareness phase starts. So once the awareness phase starts, you're going to see people saying, oh, it's climbing, it's climbing, it's climbing. We got to stop doing this. And so they're going to say, yeah, it won't go up much quicker. So it's going to cause a sell-off, which is caused by the bear trap. After that, when it goes public and everyone sees it because it went up a lot, because as you can see, it had a sell-off, but it's still much higher than the takeoff phase. It's going to have attention to media. And this is like what happened to Dogecoin. And once you get media attention and enthusiasm and greed, you're going to see price skyrocketing in public. And that's the mania phase. So you're going to see delusion like we saw with GameStop. When you go on a subreddit on Discord for like 20,000 people on Discord just yelling go to the moon and everything. So you're going to see, or like when Elon Musk tweeted about Dogecoin, how it made it go 1,500% in one night. Overnight it did it till you reach the paradigm, and that's where it really is like the top. It's like the $435 price for GameStop. Then you start getting in, that's where the blow-off phase starts. So once the stock's going to start going down, because you're like, okay, that's it. You can go much higher than that. Actually, you can go any higher than that. And this is where it gets out of control. So you start being in denial. You're stuck in a ball trap. You're like, no, it's not going to go down. It's not going to go down. But then the thing is, when it goes down just a bit, you're going to see fear, and fear causes capitulation. And capitulation, I'm not talking from just institutional investors, I'm talking retail and maybe hedge funds. And hedge funds, knowing that they have the most money in these kind of trades, they are the ones that are going to make the biggest influence on the price. And so once they start selling off, it just crashes completely, like free fall. Once the free fall's done, you actually can, if you saw the chart really well, on the despair part, it's where you're much lower than the takeoff, and then it goes back up a bit and you return to the mean. So the mean is like the average steady growth that you should see, but instead of seeing something like this, we see this. So it kind of leads to the same price point in the end of the run, but the run is really different, and that's very interesting. It's like we saw with the dot-com bubble with Yahoo and all in 2008, when they just skyrocketed and they reached the paradigm, and then they just came back crashing. So investing into Facebook in 2004, it was very unlikely to get into a phase like this, but it's still very possible to get into markets at a time like this. Imagine you're investing money into companies back in the fall of 2008, everybody else is selling, or perhaps you are investing into companies in March of 2020 when the markets were down about 40% because everybody was panicking for the illness. And this tends to be stealth phase or the smart money phase. A lot of people don't end up in this, including myself. But that's okay, because you can still get in at what's known as the awareness phase. This is what a lot of people, institutional investors, can find themselves getting into, what we kind of call the Wall Street area, where a lot of Wall Street investors might get into this, but it's still not in the mania phase. It's still not in the point where everybody and your family and all, and the friends you come to fig. So everybody's buying, like what we saw with AMC and GameStop, which we might talk about if you want in a couple of minutes. But what you have in this awareness phase is there could be another great time to get into a company. I actually know people that happened to buy GameStop stocks and it went through the roof. So they were in the right place at the right time. I mean, they might have been a genius move. It was just pure luck. Who knows? But before it hit the mania phase, so you see stuff that are building up and brewing at Wall Street, bets, investments, and all. And you saw you saw the Reddit community going like, I'm going on then on GameStop and all. After that, we enter into the mania phase, and you want to look at this is where you see the chart just skyrocketing until you reach the paradigm, and that's because of media attention, enthusiasm, greed, and delusion. It's difficult for us to say that we're in this sometimes, but it's something that I think we need to do some self-reflecting on, especially when looking at certain securities. But in this mania phase, we have, I said it again, you can kill me if you want, but media attention, massive media attention. Everybody's interested in investing, have this huge amount of enthusiasm, greed, which leads to delusion, which ends up at the peak. And let me explain to you why I believe we are somewhere in this phase of mania, and I can't tell you precisely where we are, because to be honest, people could keep driving this up even higher. We could end up doubling the prices of some stocks. I quite frankly just don't know what the answer to this, or when a bubble might pop, if we are even in the full bubble at the moment, or just starting to approach one. So sorry. So it's going to be really important to see where we are now. So if you want to talk quickly about what happened to GameStop and AMC again, it's not, I mean, I don't know if we can say it's a bubbly phase. It was just a way for a subreddit, Wall Street Bets, to just stick it to Wall Street investors because they were shorting the stock big time. And when 140% of the stock was short, it kind of crushed the company into the dirt, and thousands of stock too into the dirt. So after that, they were like, okay, if the stock's that shorted, we have huge buying power. So if we can put a few millions in it and jack up the price, the shorting positions will be annihilated. We'll make money, they'll lose money. And this is how it happened. So you saw the price going up non-stop, and you'd see the hedge funds selling their position and buying higher positions now, and as a shorting position. And that's really bad for them because you're actually helping the stock go up. And so they were in this vicious cycle that could have been never ending. I mean, not never ending, but it could have been much stronger than that if Robinhood didn't come in and said, yeah, you're going to stop buying GameStop, you can only sell. And this was it, and the stock went down. Now it went back up because you still have 30% of the stock shorted, but I mean, it's much less than 140%. And so you can say that they did what they wanted to do. They all made money. They went out of it really happy with the testimonies and the lawsuits and all. And so this was it. So about the stock market bubble, I really don't know. You have a lot of investors that are saying we're in a bubble that the Fed is just preventing from popping up. You have others that are saying, no, we're not in a bubble. Now, there's arguments and concerns for both. Like you can say we're in some kind of EV bubble where the stock keeps going up. We have these crazy valuations that came, especially in 2020. And usually people anticipate a crash after that. And this is when the sell-off starts and comes back crashing down. Who knows? Only time will tell, I guess. But if you want to go through it and stay profitable, do like Graham Stephan and Dave Ramsey say, buy consistently and hold. Just buy. And in the long run, you'll end up profitable. because the stock is going to come back up. So I think that's it for today. If you enjoyed the video, again, hit the like button for the YouTube algorithm, subscribe to the channel if you haven't already, and hope to see you guys next time.